uranium was added to the U.S. critical materials list. And for many, many years, the U.S. Geological Survey, which keeps the list, did not include uranium because they argued it was plentiful. And they just, in the last few months, added it to the critical material list, which is also another sign that the government is concerned about its supply chain for critical material.
John, I want to have a discussion with you on nuclear energy and nuclear reactors, and the fuel that drives the reactors is uranium. And I don't think there's another sector that has so many positives behind it or so many tailwinds as nuclear energy and by extension uranium. And yet the move that we're seeing in the spot price and the term price can best be described as tepid. Why?
Yeah, I mean, I think 2025 was a really unusual year for uranium. And the reason is basically uncertainty. And uncertainty is mostly related to policy and how uranium is entangled in trade policy, obviously things going on in Russia and the war in Ukraine. All of these things have had a profound impact on uranium, as well as the incoming administration at the beginning of the year created a lot of uncertainty for all things uranium. And, you know, fast forward to the end of the year, it's finally starting to alleviate. The tariff threat on uranium is largely behind us. There are no tariffs. The Inflation Reduction Act, which saw meaningful changes, mostly related to renewable energy, electric vehicles, hydrogen, did not see any negative impacts with respect to nuclear. And the Trump administration has been incredibly supportive and holistic in their policy approach to nuclear energy. And just a few weeks ago, the US government announced up to $80 billion of funding to build brand new reactors in the United States for the first time in many years. So yes, there's been a very kind of frustrating year in terms of policy changes and uncertainty. And that has definitely weighed on the price as utilities have kind of stepped away from the market. But it feels as though in the last few months that market is becoming more normal. Participants are getting back to business because at the end of the day, you know, they can delay and defer purchasing uranium, but they ultimately have to buy it. And it feels as though there's a lot of pent-up demand in the system that is coming to market in the next few months. And as you said, the spot price is kind of swooned. It went from, you know, the low 70s per pound to 63 at the bottom the first week of April. It's been as high as $82, $83, and now we've kind of settled into kind of the high 70s. So it's been kind of an up and down sideways year. But it feels as though the market wants to move higher. The term price, which is obviously the more important of the two markets, is starting to move higher. We finally, after months and months of stagnant prices there, have seen the term price move. And that's a good sign because it signals that utilities need to pay higher prices. And you've also seen very anemic utility contracting this year. And I'm going to put this into context because I think it explains a lot around the range-bound pricing. The industry needs about 185 million pounds of uranium every year to sustain itself. And the industry considers replacement rate contracting to be about 150 million pounds. Now, why the difference? Because not all the transactions are reported publicly. So 150 is kind of considered a proxy for replacement rate contracting. So far, the first 11 months of the year, we're at 75 million pounds. So we're basically at 50% of replacement rate. And up until the end of October, we were only at 40 million pounds. So there's been a lot of delayed purchasing for most of the year, given all of the uncertainty and anxiety in the marketplace. Now it's starting to lift, and we think that basically a lot of that demand is going to get kicked forward to next year. And that should help pricing and send new messages and signals to the marketplace. Producers are still in kind of a supply discipline mode. They're not interested in selling uranium at low prices anymore to utilities. And so the stalemate that we've seen we think is eventually going to break.
As you mentioned, both the spot market and the term market have been relatively quiet. Spot's more or less flat on the year, but the equities have done very well. And when you look at Cameco, for example, the second largest producer in the world, last time I looked, I believe it was up 70% on the year, which is totally different from last year. But now the equities are almost looking ahead. Do you think that's telling us the price is going to be much higher in 2026?
Well, it clearly signals that investors are bullish on the space, and they're bullish on the equities because they're bullish on the fundamentals and the long-term pricing for uranium. So investors have obviously moved in response to all the policy signals and future demand signals that the marketplace is sending out. The utilities are the ones that are buying the physical uranium for the most part, and those are the ones that have obviously been lagging in terms of their procurement. So I think you're right. The utilities are kind of a lagging indicator, and the investors, I think, are more of a leading indicator in terms of where the marketplace is what we believe is where it's going to.
All right, so let's talk about some of the positive news. You mentioned that the U.S. is going to go ahead and build 10 nuclear reactors. I believe construction is going to start in 2030. They're going to invest $80 billion. The last nuclear reactor that was constructed in the U.S. was in the state of Georgia, and it was, I believe it took them 15 years to construct that. Do you think it's feasible for the U.S. to build this many new nuclear reactors? And are they going to be able to do it? Do they have the ability to do it?
Yeah, I mean, that's the big question. And I think the answer is they did it in the 70s, and they clearly have lost their competitive advantage by allowing the entire supply chain to disappear over the last few decades. And if you look at what happened in the 1970s, it's similar to what's happening in China right now, is they built up a very specialized workforce and supply chain, and they were able to build reactors much more quickly. And if you look at the 4 executive orders that the Trump administration put into place in May, it tells you that they are acknowledging the problems around permitting times, permitting costs, not building the same reactor model over and over again like they're doing in China, by the way, in 5 to 6 years per reactor. So they have it down to an absolute science. And so yes, it's going to be a challenge for the U.S. to get up to that kind of scale and efficiency. But the U.S. government has acknowledged that utilities are not willing to take the financial risk themselves, and there has to be some kind of a public-private partnership model to kind of kickstart this next building cycle. And that's exactly what they're trying to do, is incentivize utilities to make these investments and de-risk the projects in partnership with the Department of Energy. And so it's a very bullish sign because it's been one of the things that's been missing in the story. Yes, we have a number of closed power stations and partially completed power stations in the U.S. coming back online, and a number of other ones that are having life extensions, but we really haven't had any net new capacity. And this is a really, I think, important symbolic announcement, and obviously it's going to take time to get shovels in the ground, but everything is moving in the right direction. And other governments around the world are making similar announcements. And put that against the backdrop of supply. Well, supply has been growing very slowly, and so the demand forecast keeps getting better. The supply forecast, I'd say, has been kind of stagnant because the producers are signaling they want higher prices before they bring more pounds out of the ground. And I think that's been part of this stalemate between producers and utilities. With the exception of China, a lot of utilities have been kind of cautious. China continues to buy huge amounts of uranium and stockpile it for their future reactor program.
The U.S. government has made many direct investments in mining stocks, Trilogy Metals, Lithium Americas, and also MP investments. Do you foresee them doing the same thing in a uranium company or a uranium producer?
Yeah, I mean, I think it's one of the most fascinating things that's happened this year in terms of how aggressive the U.S. administration has been to kickstart this kind of reshoring of critical supply chains. As you mentioned, they're doing it with lithium, rare earths, cobalt, bismuth, and this is basically to wrestle control or mitigate risks against China because China is so dominant in many of these supply chains. And we've seen in this trade war how China can basically announce export restrictions on critical materials, and how immediate industry can be impacted by that. So the question investors are now posing is, well, if they're doing this with all these other critical materials, why not uranium? And it's a great question to ask because the US is hugely dependent on other countries for its uranium. I'm going to put this into context for people. So the US today has the largest fleet of reactors in the world. For now, China will pass it by 2030. And those reactors require almost 50 million pounds of uranium every year. The US might produce 1 million pounds this year. So there's a huge dependence on foreign countries, some friendly like Canada, Australia, but other countries like Kazakhstan, Uzbekistan are suppliers. And so the US has acknowledged it is very dependent on other countries for critical material that supplies 19% of US electricity. And US electricity, as we know, is growing enormously because of AI data centers. So the administration has floated out this idea back in September that they should consider a strategic uranium reserve. So what does that mean, strategic uranium? Well, we know there's a strategic petroleum reserve, and that's there to basically help against high prices or shortages or disruptions. So what could a strategic uranium reserve look like? Well, we don't know because they haven't told us, but it could be things like equity investments in development companies in exchange for offtake for future production. It could be setting a minimum price floor for US domestic uranium production. These are all, I think, tactics that they have shown us that they're willing to entertain to help resuscitate and reinvigorate local production of uranium. So, details to come, but I think investors are taking notice of some of the deals that they've announced with other companies and other critical materials and asking the question, why not uranium? And we would not be at all surprised if we get some announcements in 2026 around more funding. We know there's a lot of funding right now for enrichment and processing of uranium, which has been really the sticky point given the breakdown in relations with Russia. So why not go upstream to uranium mining? It's a logical kind of question, and we would not be surprised at all if we see some announcements.
I'm reading a lot about Section 232. What exactly is it, and what does it mean for uranium?
Yeah, so the U.S. government is undergoing what they call a Section 232 review on uranium and copper and some other critical materials. And basically, it's a review to assess the strategic kind of resiliency and vulnerabilities to critical materials. And so, given the math I just laid out for you around their dependence on uranium of other countries, it's no surprise that they're going through another one of these reviews. It is delayed because of the U.S. government shutdown, but we would expect it at some point in the first half of next year that this report will come out, and obviously it's going to lay out the issues that the industry is facing around its dependence on other countries for uranium. It's impossible to know exactly what actions will come out of that, but I think it's important that it is setting the stage for more investment and more, I think, intervention. The other government action that recently happened was uranium was added to the U.S. critical materials list. And for many, many years, the U.S. Geological Survey, which keeps the list, did not include uranium because they argued it was plentiful. And they just in the last few months added it to the critical material list, which is also another sign that the government is concerned about its supply chain for critical material.
So it sounds to me like 2026 is going to be a great year for uranium.
It feels like it's setting up. It feels like a lot of this uncertainty is behind us and that everyone's getting back to business, which is building out more capacity and ensuring their future uranium requirements are covered. And there's also some very interesting new mine developments happening that in the first quarter where a couple of key mines are expected to finally get their environmental permits. So it's all starting to finally happen. And that's very exciting because investors have been waiting a long time for these things to finally get approved.
Well, that was a great overview, and thank you very much for spending time with us today and sharing your thoughts. If investors would like to learn more about nuclear energy and uranium, where can they go?
Yeah, come to sprott.com. We obviously have all of our products there, the different uranium mining funds and the physical trust. There's a great insight section. We do a lot of commentary every month and podcasts and webcasts that we cover this topic. We like to be the go-to place for all things uranium. Sprott is the largest manager of uranium investments in the world. So it's something we've made a huge investment in, and education has been a real focal point for us.
John, once again, thank you.
Thank you for having me.